in the green. So let's go from Phoenix all the way to New York City right now. And we have Gerri Willis there from Fox Business. Thank you so much, Gerri, for being here. It is really rocky today.
Mike, if you had told me this would be the outcome of this morning's jobs numbers, I would have said no way. But the Dow is up 321 points now. The S&P up 38. The NASDAQ up 140. This is a great Friday in the markets. Let me tell you what happened that made people think that maybe they wanted to buy some stocks today. We had a disappointing jobs number come out for May. Creation of only 75,000 jobs. This against expectations of 185,000. Keep in mind, in April, we created 263,000 jobs. So real disappointment. So why did traders and investors like that? Well, the reason is pretty simple. They think it's more likely that the Federal Reserve will now cut rates. Bring rates down. That'll help everybody from banks to people who are going out and getting mortgages to people who hold credit cards. So they liked it down here on the floor of the exchange, but lots of bad numbers out of this jobs report. Wage growth 3.1%. This was also a disappointment. Manufacturing jobs, only a gain of 3,000 there. So interesting. Sometimes on the floor of the exchange, good news is bad news and bad news is good news, if that makes sense, Mike.
Yeah, absolutely. And now, Gerri, where do we stand on the Mexico tariffs? It seemed like yesterday we were getting word right before the closing bell that those would be maybe easing or delayed. What's the latest there?
Yeah. So the latest is that the U.S. has officially granted Chinese exporters 2 more weeks to get their products into the country before increasing tariffs. So they pushed out that deadline. And I have to tell you, my sources down here told me they would be surprised if the U.S. ended up putting higher tariffs on Mexico, because they say it's so easy for Mexico to turn the tables on the U.S. because we sell so many goods to them, natural gas, all kinds of goods and services coming from the U.S. into Mexico, and they could just turn around and raise tariffs on those products. So lots of skepticism that was actually going to happen. Now it has been delayed, but I have to tell you, in reality, anything could happen here, and we could get higher tariffs later. But it does look like the two sides are sitting down and negotiating right now. Mike?
All right. And Gerri, just moments ago, President Trump tweeting out, and I'll read it out to you. He said China is subsidizing its product in order that it can continue to be sold in the USA. Many firms are leaving China for other countries, including the United States, in order to avoid paying the tariffs. No visible increase in cost or inflation, but U.S. is taking in billions. So he put that out just moments ago.
Right, and you know, we watch every tweet that comes from the president because it doesn't just impact policy, it impacts stock prices, it impacts the markets. You know, I have traders tell me all the time that they are watching that Twitter feed like a hawk because they know it affects every share price of every company that they trade. So it's a very big deal indeed.
And what are investors thinking about President Trump's comments last night about saying, you know, if it wasn't for the Fed, the Dow could be up another 10,000 points?
Well, so the president has been jawboning the Fed for some time now. He wants rates to come down. He wants the Federal Reserve to cut interest rates. It would be good for companies. It would be good for stocks. He was the first to really get on board with this idea late last year, saying that the Federal Reserve and Jay Powell had to turn around because if you'll remember, we had 3 to 4 rate increases that were expected to happen this year. Now just the opposite is expected to happen. We're expecting maybe, perhaps, a rate cut as early as June, very possibly July. So that's a super quick turn for the Fed. You don't normally see that kind of thing. And it has a lot to do with the president. I won't kid you.
All right, there we go. Thank you so much, Gerri Willis, for always breaking it down.